The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the April 4th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's have an extraordinary one. And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift. We can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 8 o'clock in the morning. That's right. If you're listening at the 1 o'clock show, this show today is being archived, being taped live at 8. Right now it's 8:07, but I'm going to make the show as pertinent as I can for trading and investing and understand what the markets are communicating to at 1:07 in the afternoon. If you are listening to us right now, I would love to hear from you. So pick up that phone, dial on in, 877-927-6648. If you can't dial in, we've got you covered. You can just send me an email. Let those fingers do the walking. Steve@TFNN.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We've got basically flat markets out here, equity-wise. You've got the Dow futures up 2 points, S&P down nearly 2 points, NASDAQ off 14, Russell off 2. So not much going there. U.S. dollar index up 13 pennies, trading at 96.79. Gold is off $3 right now, trading down at the support line of the 1292, the bottom of its daily profile out there. Silver's off about 12 pennies, and light sweet crude up a quarter. So no questions thus far. So let's do this here. Let's take this approach, and I'll explain. And this approach, let me explain. I give you all the reasons why the market is bullish out here. And we kind of went through a lot of that yesterday. And let's try to take at least some of today's show. Let's try to take a tack of, well, what if we're wrong? Now, the reason why I say the what if we're wrong, not really wrong, because the market is bullish. There's no other way to call it just yet. But let's just take a look. Now, the reason to say, something to think about is here's that picture, Dow Equity Futures. So this way we're live, and we're taking a look at the how it's trading, both in terms of euros and in terms of dollars. And we can see we're right up against what could be resistance. That's the Dow priced in euros. That's the very right-hand panel of our screen out there. Now, in euros right now, if you're a trader and you're buying the Dow, buy whatever vehicle, in essence, it's because the Dow is priced at 23,250 in that currency, which is important. They could give a rat's patootie about what it's priced in dollars, although that's not completely true. But for them being those folks that are using euros as the currency base out here, it's got to be making, the instrument has to be making money in their currency. Now, the way that, and this is a consolidation pattern that's going on most certainly in terms of dollars, and in euros, likely to be the case. When you get up towards the top of the consolidation, this is in essence is where it would be the best reward risk for a trader to take a short position, because you close it out if price closes above the top of the consolidation. You got to give it a skosh, a little bit of room, or you have to figure out, where, in any event, let's leave it like that. So here on the screen, this says, all right, so our brethren and sisters over in Europe may be saying, we've gotten everything we could possibly ask for out of the Dow as it went back and it retested its low from February of 2018 out there, similar to how our market tested the 2018 low, only in our case, the U.S. dollars, price really crushed below that level, that swing point of 23,202, but managed to close above it by the end of the month, meaning December out here. So now when we take a look, so all right, are there any signals? That's really the question. So let's just say, are there any signals for you and I that we should be concerned with? So there's a few. There's one in particular, is this one you and I have talked about this in the past. Let me see if I can, well, I know I can find it. I just have to find it. Here we go. It should be right here. Okay. So now what we're looking at, so the top panel of this screen, it's the S&P 500. So you're not going to see a change in price. Yesterday's close 2873. The bottom panel of the chart is the spot volatility index along with its 50-day exponential moving average. That's priced at 1552 right now. Now what we do know is that when price is below the 50-day, the spot VIX that is, below the 50-day exponential moving average, tells us there's plenty of liquidity in the markets. Liquidity is what is going to keep the markets higher. That's the natural put inside the market. People call Powell puts, Ben Bernanke puts. It's a lot easier than that, quite frankly. However, it's not going to, you can't use that tool to identify a top or a bottom. But what we can do is look for some early warning indicators. You know how you hop in your car, last night everything was fine, you start it, and then one of the engine lights or some type of light comes on, some type of warning. You're like, that's a bad day, potentially a bad day. Okay, so the warning light, the early warning indicator for us is when we see a rising bottoms pattern in the spot volatility index, which would be the green diagonal from lower left to upper right, lines that you see spread out throughout the chart that you're looking at. At the same time, and I know many of you want me to say simultaneously while we see price rising inside the S&P 500. And that is exactly the pattern that is in place. We saw this pattern. You and I, we took a look at it. Oh, what's going on with the cursor here? That's wild. I wonder if I've accidentally locked something. No, nothing locked. Well, oh, there we go. Now it's starting to move. Okay, so back here, March 15th was the beginning of the earliest, the most recent, other than today's, the most recent rising bottoms spot VIX index on a closing basis. Closing basis has to be a closing basis because it's a line chart out here, and we can see that price inside the S&P 500 was also moving. We saw a pullback, very slight, a pullback to support. Now, you don't see the support here, but the support was the 2,800 level. That was the bottom of the daily profile out here, so support held. But we can also see we have that current pattern either going back to that same time period of March 18th or 17th, 15th or 18th out there, as well as it re-beginning, and I know that's not a word out there. There's no way that's a word. But either way, it restarted the same pattern out here April 2nd. So it's got to make you say, something to think about. Because when this pattern is out here, folks, the hair on the back of your neck has to be standing up. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at the S&P 500, and we're looking at the divergence that exists right now between it, which has a rising price, as well as the spot VIX index having a rising bottoms pattern on a closing basis. So the real number to be watching, it's now 8:18 or 1:18 in the afternoon. If the spot VIX index, the way this pattern gets violated, we would need to see a close below on a spot VIX index, close below 1288. Right now it's trading at 1381, so about $1 to the upside out here. So now this pattern itself, when you see this divergence, sometimes it just leads to just a normal, simple correction out there. Not a correction, a retracement, really. Let me just try to use, because correction would be, 10% or more. So I'm just going to use, some type of retracement. When you get that rising VIX bottoms pattern and the spot volatility index is above the 50-day, as was back here in January of 2018 for the S&P 500, and that led to that big thrust to the downside, that first big one. That's kind of an easy one to call. When the spot VIX index is below the 50-day, you don't know if it's going to turn into, a cold that goes to the flu, or it's just really a cold out here. And again, this cold can go away. The sniffles can go away. You just need to see it close in the spot volatility index below that 1288 number out there. So it's something we want to watch. So let's just say that we can't use this as the signal. And those of you that are bearish out there, don't go backing up the truck because of this and something I just said, because the Dow Equity Futures contract hasn't taken out its all-time high. Priced in euros out there, but let's just stick along with the S&P. But now let's switch over to the ES Mini. Again, looking for some early signals out here. Now we know that markets make tops and bottoms. One of the ways that they make tops and bottoms is with the Rhodes Momentum Indicator pattern out here, which is exactly what took place yesterday at 12:30. As price was moving higher, doing less relative energy, you have that nice little bear dark cloud cover candle that forms. And then at 1 o'clock, although I was not on the air yesterday, but at 1 o'clock, if we were looking at this, what we would have said to you, of course, you don't know if what I'm telling you is the truth or not, except that it is, because this is what you and I do all the time. we say when we see a topping pattern where support, well, on a 30-minute basis, that support would have been the bottom of its profile, which was 28.79. And with price below Stevie's green line at that stage at 1 o'clock, that's where price should have moved down to. Well, it did. And it did that by 2 p.m., but it actually closed below that, and it closed below a secondary level of support. That was established by that Tommy DeMark setup trend line. That's the red solid line that you see. That was priced from 2 a.m. on April the 3rd, and that low was 28.7850. Once price closed below that, then we had to go search for other levels of support out here. Well, here's what we know right now. There was a new profile that formed at 4 p.m. last evening. That becomes support, or did become support, but new profiles have formed since then. So the question is this now? If we just simply, right now what we see here is a series of just, on a 30-minute basis, 3 lower highs. We don't have 3 lower lows out here. And so if there is a market turn, what we should see is we should not see the highs of yesterday tested. And if anything, what we and this is where the caution. So right now, there's a possibility that there's an A to B equals CD to the downside, which really turns into, as you know, a Gartley buy pattern. And that would take price to 28.6275. So what else is at 28.6275? Now, I don't know the answer to that, but we want to go take a look. What else is it? Does 28.6275 bust through any other level of support? Now, when I say any other level, I'm going to go all the way to the daily time frame. And at 28.62, that gets us 28.6875 is Stevie's green line on a daily time frame out here. So I'd say the real key is, does price begin closing below, this is the ES mini, below Stevie's green line? I'm not calling for that to take place, because what we can see right now, as long as price trades about 28.66 and we're at 28.78 right now, there is an A to B equals CD pattern inside the ES mini to the upside that does not complete till 29.29. However, we must open our eyes up to the fact that if we're going to see any kind of change in trend, if that early warning indicator signal, you know, you hopped in the car, you started your engine, you got your engine light, well, that's what takes place when we go to take a look at the charts here. You hop in your seat, you open up the chart, you take a look at make sure everything is hunky-dory, you know, you go through your checklist. Going through our checklist, we're like, this is not necessarily a good thing, so what's going on the shorter term basis? You sort of get it here. So this 28.68, 28.62 level is going to be really key. Now, if you get a close below that, let's just say that's how things play out. I don't have any reason to believe that they will. But let's just say that it plays out that way. It's now 1:23 in the afternoon, and you can see that price is trading below those levels. Then what are you looking for? Well, there's now 3 other levels of support inside the ES mini. We have to look at other things going on out there, but 28.47, the top of the current daily profile. 28.23, the center of that profile, and 2800, remember, that's the level where price pulled back to the last time we saw that divergence between the S&P 500 and the spot volatility index. The 2800 becomes the line in the sand, so to speak, that if that fails, then we've got a larger change in trend unfolding out there. And that's what I see when I take a look at the S&P 500, the ESPN on a short-term basis, and then understanding what's going on the daily time frame. So let's go to one of the first questions that came in. I don't know necessarily, this is from Alex, and Alex is writing the question, and he's asking about the S&P 500. So I'm going to put that up on the screen. I've got to decorate the chart. He's asking me to use a tool that I only use, quite frankly, on the spot volatility index, because I have found a way that it has meaning for me. But what Alex is asking about is the Bollinger Band. So I'm going to put that up here right now. We're going to put up a Bollinger Band. I just have to find it. Just give me uno momento. So here we go. Now, this is just using the standard 20 and 2 standard deviations out here. And the question is this. Hey, Steve, do you agree with this statement? Concerns would increase in 2019. The S&P 500 prints a monthly close back below the Bollinger Band center line, which you say is currently at 27.23. So you've got 27.23. I've got 28.16. So now, and Alex, I'm using the normal settings, what I believe to be the normal settings that John Bollinger uses. So, so what are you using? What what am I incorrectly using out here? You know, the other one that I use a 50 period and a 1 standard deviation, 2768. So I apologize. I can't get to, Alex, to the levels that you're using because I've got different settings. But your question is, and you can see here, folks, so I am not a Bollinger Band. I'm not even a novice. I'm not, you know, there's 3 levels of life. You've got folks that are dabblers, stressors, and masters. When it comes to trading investing overall, I consider myself to be a master. Pattern-wise, you wouldn't be listening. You wouldn't give a rat's patootie about what I had to say if I wasn't fairly good at what I do. But when it comes to using Bollinger Bands, I'm not even a dabbler here to know whether that's a problem. I'll say it's a problem because you say it's a problem, though. Steve Rhodes with TFNN. Hope you're right. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Alex, one of our Denners, Peter, has a great idea out here, and is kind of a segue into. You're asking about the monthly chart and a price level to be concerned with. And so what I've done here, we're taking a look at the ES Mini. And this is looking at the daily, weekly, monthly, and quarterly time frames from left to right. And the lower left is the monthly, lower right is the quarterly. So you were asking about monthly. Peter threw something out with regard to monthly. I'm going to open up and expand the monthly chart. Here's where I would say your concern would come in. And the beauty here is this is going to be above the level that you were looking at with regard to the Bollinger Bands, regardless of the fact I couldn't get your settings to work on my system. And that's this. So you'll notice here on the monthly basis that the current profile is a bearish structured profile. Now, just quickly here, because some of you are watching the show, which we love, on your phones out here, and just to make it easy for you to see when I say bearish in structure, what I mean out here, we're looking at the current box. And by current box, I'll just put a yellow rectangle around them to try to make this as easy as I can. This is what we're looking at out here. I don't have a way to turn off the prior boxes, but it's this box. In the center of the box, this happens to be on a monthly basis, the area where both buyers and sellers are most comfortable with price. That's the easiest way for me to explain that, often referred to as the point of control, 28.75. That's really the number to be watching. Now, we say bearish in structure because that center line is closer to the top of 28.92 than the bottom, way down at 25.75. So I'll go ahead and turn price back on. The reason why I would be watching the 28 level, just like you should also watch 28.92, because a close above 28.92, nothing more bullish than a failed bearish pattern. This would be considered a failed bearish pattern, meaning a bearish structured box, and therefore price should then make its way up towards that rising trend line out there. Now, not that the rising trend line would hold price, but it becomes a target area. And right now for the month of April, it's about 3,007 is the number out here. And I think, yeah, so 3,000. This is what's called 3,000. But here's the deal. Let's stay on track here. If price at any point in time, while this profile exists, doesn't have to be April, could be May, if we see, Alex, to close below 28.75, then what can start occurring out here is sellers really are in control at that stage. And I don't mean like 28.26. I don't know what I mean. I mean not 28.75. I mean probably 28. I'd go with 10, 15 points below that level out here. Most certainly a close below the low of last month, 27.27. That then says, okay, we're headed down to the bottom of the box. That'd be 25.75 out here. So I think the real key number, the real key takeaway is 28.75 and something below there. You start getting below that area, unless something else shows up on our screens out here, that would then start to send a message to us to anticipate and expect that price would start moving down towards that 25.70 something area. The bottom of the weekly profile is 25.72. The bottom of the monthly, 25.75. And quarterly, all the way down to 23.27 out there. And that really becomes the ultimate support. And you can see that price is trading into the top of that quarterly profile level. 28.85 is the number. But we're trading at 28.79 right now. But the actual high, as we know, has been 28.89. So it's been up. So we're up into an area where there should be, quite frankly, some pretty significant resistance out there. So I hope that helps you out. Thanks for writing in. Sorry that I couldn't find your Bollinger Bands with my system out there. Just something I'm sure that I was doing wrong. Bill writes in. Bill P says, please look at SOX. Plus SOXX, SOXL. I've been in both for 4 days. And the SOXX reached new highs. Is any pullback short-lived because of the new highs that the SOX reached? Bill. Okay, so how am I going to easily answer this question here? I know you're looking at the ETF. It's going to be easier for me, I think, to put up the SOX index, the semiconductor index out here. So let me do that. And let me pull over the daily time frame chart. Now you're asking, is any pullback short-lived? Really depends. And the reason why I say it really depends, Bill, is if you take a look at, so we know that one of the ways that markets make tops Well, they can do it with a Tommy DeMark setup 9 count, as the semiconductor index did on March 21st. It got to count number 8. Remember, that top can occur on day 8, 9, or the day following number 9. But there was a pullback. But the pullback was nothing more than just a retracement. And retracement never even really testing support, because support here, we would have said, would have been at the beginning of that 9 count or the low of that 9 count. That was March the 12th out there, and that was the 1342 level. You're trading above Stevie's green line. That's 1428.28. So that looks good. However, yesterday's push higher was done with less relative energy out there. And it's really all about energy. And so if you were to get you use the term pullback out here, but if we were to receive a bearish reversal candle today, that's the kind of pullback that says, no, it might not be short-lived. We don't have that yet. Yes, it was a bullish candle, no matter how you slice it. It was a gap to the upside, period. Gaps are your friends out there. Now, if we were to see both a bearish reversal candle and a close below Stevie's green line, currently at 1428.28, then we would say, yeah, this may not be short-lived. May just simply be a test of support right now, which is nothing more than the March 28th level. That would be 1365. But I don't know. We know that's support. We know that's one level of support. We know the secondary level of support is going to be 1342. And we know the third level of support is going to be the date, the low of February 1st. And that area is 1274.69. So you got to take this one step at a time. Right now, it's still bullish. I can't call it any other way. You were saying if any pullback short-lived, if it's a bearish reversal candle, just make sure you tighten up your stop there. Should you sell the semiconductor index? I don't see that. Now, maybe you have some inside information. You've got another tool to identify a top out here. It doesn't show up on my screen on the daily time frame. Now, maybe we need to look at something more than just the daily time frame. Maybe we need to look at the weekly time frame too, Bill. If we look at the weekly time frame, what do we see? Yeah, we see the close above the highs for March 16th, or it looks like it. Let me see. The March 16th high was 1464.61. No, it was a test and a rejection of that high. Well, that's interesting, because we know that when you test and reject, I don't know if it was volume or not, a swing point, or you've made a 100% move of a move, it can be an indication that price is going to pull back. I'm not saying that. I don't see anything bearish out here other than a retest of that swing point. Here, support is 1348.79, Stevie's green line. If we do the wave count from the bottom out here, let's just see what that is. Only in the third wave, so no indication here yet on a weekly time frame, Bill, that the semis have formed a top. If we look at the monthly time frame chart, again, monthly up against the bearish reversals candle, bearish engulfing candle out here. Price moving higher, doing less relative energy. 1418 is a key level of support here for the semis. Right now, the message at 8:38 a.m. is to stay long, certainly not short. But you get a bearish reversal signal, that could change. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So right now, gold is trading out at 1286.10, and Peter in the Den wants us to take a look at gold. And the question, his first primary question is, hey, gold right now is trading below its daily bottom of its TAS market profile. The bottom of that profile specifically, in this new box set form. Now, what I'm showing you on my chart right here is my synthetic or composite version of the contract, and the reason I have that up is so that we can take a look at longer-term time frames. As you know, the contract here has rolled over to June, and so I have limited data, at least by having, and the point I'm making is I think if I switch to the daily time frame chart, Peter, we're somewhere close to I think the levels are just slightly different. Needless to say, it is a problem, synthetic or otherwise, closing below, if it does close below, the bottom of that profile today, 1290.80. So, like, and what is that going to mean? It really kind of means where does it close below? Now, it's also a problem because you've got price on a weekly basis. It's Thursday below the bottom of the weekly profile. That's 1291.40. So close below that this week is certainly not a bullish message. Close below both of these profiles tomorrow. But Peter's asking me to comment on it today. What else do we know? If we look at the monthly and we look at the quarterly time frames, well, those are the two bottom panels out here. The bottom or the top of the monthly profile is 1290.90. So in essence, key levels of support are really being tested as we speak, even though they've failed, so to speak. And I won't say so to speak anymore because that'll just, make you throw up. I don't want to do that, but key levels of support are really being tested. Now, on a monthly basis, and it's clear on the monthly and the quarterly basis, you can see the descending trend line out here. So we can see resistance, that gold needs to overcome to really change its trend. Of course, we would say on a quarterly basis, you close above 1367.80, that becomes a beautiful thing for the bulls out here. Price has not been able to do that for quite some period of time, meaning going back to October 2016. If I just simply expand this chart out here, and this is the quarterly time frame, you tell me if price closes above the top of a quarterly profile, whether you want to be long gold or not. Likewise, when it breaks below the bottom of a quarterly profile, closes below, as it did in April 2013, it's kind of been a bummer, right? It's led to lower price. But now what we can see here is we can see the snow cone. We can see the triangle that it has at support. 1183, the bottom of the quarterly profile. Resistance really 1367. Yes, the descending trend line, but for me, the on a quarterly basis, the line drawn in the sand would be 1367.80 to generate a very bullish message for Goldilocks. So, in commenting to Peter, what do I think about gold trading below support today? Well, I have to go to my 5-hour time frame chart. That's the 300-minute chart that we have up on the screen. And if we start our counts here from the actual high that was formed, which was a Tommy DeMark setup 9 count. It was on bar number 8. It was at $1,700, and that was on March 25th. That's the most recent high that we have for Goldilocks. Now, we don't have a 9 count to the downside. What we do have, though, if we start doing our letter counting, our wave counting from that high, that lower low that we saw take place here over the last hour, Peter, has moved to wave number 7 on the 5-hour time frame chart. Now, wave number 7 doesn't complete until there's a higher low. This bar doesn't complete for another 14 minutes out here. But at 2 o'clock, if price is not trading below, has not traded below the low that we have so far, 1287.10, well, then it's very possible that especially if and with prices also moving lower, doing less relative energy out here. So we've got another potential bullish pattern that is forming. So to sum it up, Peter, I would say support is being tested. We need to know what the end of the day looks like, more so than 8:46 in the morning. I realize it's 1:46 in the afternoon if you listen to the normal show out here. I don't know. Or a restart on C on 300. Shoot, I don't know what you're referring to there. Maybe asking me to restart the counts. I'm not sure. But in any event, this is what I look at out here. So you've got 2 potential bottoming patterns. The 5-hour time frame chart has worked really well. Right now, it's a kind of a coin toss, if you know what I mean. And if we look at gold price in the other currencies, it's moving lower as well. It's moving low. It's made a lower low in pounds. It has not made a lower low in yen. It has not made a lower low in euros out here. So it's kind of a mixed message with regard to the global flow of capital out there. And what did I do with that? Oh, what was I? Restart the A to B equals CD count out here. You're referring to an A to B equal. Well, I apologize. So this is what I see at this stage of the game out here with regard to the gold contract. I hope that helps you out. Another request came in. Tim M wants to say, he says, Steve, RTN broke down rather badly yesterday. So let's go take a look at RTN. Let's put it on the 3 time frames out here. That is a Raytheon company. Do you see an entry point if it is bottomed? So the first thing, Tim, that should stick out to you when you look at that daily time frame chart, and you alluded to it. You didn't allude to it. You said it. You said broke down rather badly yesterday. Now I'll interpret badly. That is a wide-ranging bar to the downside. That's what you've got. Markets typically, can't say it 100% of the time, markets typically do not end on wide-ranging bars. Plus, so we know that. Yesterday, kind of like gold is doing right now, but we don't know the close. But what we do know is the close of Raytheon yesterday was a close below the bottom of that profile. And it was a close below the top of the week, bottom of the daily, top of the weekly, inside the box on the monthly. Volume yesterday was also pushing this prior swing point. You've got what looks like a swing point right here that had 2.3 million shares, that here being March the 7th. So that could be a small little A to B equals CD to the downside out here. But I don't see the bottom, so to speak, out here. So you're asking, do I see an entry point? I don't see an entry point inside of Raytheon. Now, I don't know how it's going to trade today. If it can regain its box, close above 178.15, and then there's a possibility. I'd have to say 179.11. That's the top of that weekly box. You'd really like to see price above that. If you're going to ask me for a price target here, I'd have to go with the weekly profile and say 160, 680, 163. Now, I want to look at the monthly time frame, but I'm going to do that by pulling over my other set of charts out here. And a key level of resistance that you and I can see is Stevie's green line. Beautiful tool for identifying, helping you to identify whether retracement is just a retracement or a counter trend rally. It's just that, a counter trend kind of rally, which is what you saw in September. Was it September? It was September 2018. Price moving right up into that resistance level. 194.67 must be cleared before you want to take a long position in Raytheon. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So look, if you're listening at the normal recorded time, 1:54 in the afternoon, thanks so much for doing that. Tomorrow I'll be back to the normal programming time, or should be, from 1 to 2, and appreciate the emails and the requests inside the Tiger's Den this morning here. What are we going to be watching, today at 1:54? What are you looking at? If you listen to the show earlier, we're watching to see if the ES mini specifically, if it continues to make lower highs out here. I'm just looking at a 30-minute time frame chart, and the reason that we're doing that is because of the divergence that exists, because the S&P 500 has been rising in the face of a rising spot volatility index, always a precursor to the potential of a retracement, at least a retracement or something worse than that. So we want to keep an eye on that. So during the last minute, as far as things that are moving to the upside and to the downside, most of you know, Tesla moving to the downside, closed at 290, saw 30 bucks, trading out at 260. So if we just simply go take a look at our market profiles and take a look at where's 260, 260 happens to be the bottom of the weekly profile. It's a level that was tested last week. It's 259.67. This area, and when I say area, I mean this area has been tested, and I would call the area price coming down to about 244.59 several times since April of 2018. Here's the key. If you were to see a close below 244.59, this would suggest to Stevie that price would be headed back into the 178 level out there. That's based upon the weekly chart, and it's 221 is the number that could be support on a monthly time frame. That's what Stevie sees when taking a look at that Tesla. But that's going to be one huge wide-ranging bar to the downside, or it appears that it will be, as the market opens. Folks, thanks so much for being here. Stay tuned if you're listening at 1 o'clock. Your favorite polar bear, David White's, coming up next. And if you're here right now at 8:56 in the morning, it's our favorite, Larry Pesavento. He'll be up next. Have a great Thursday, folks.